Warren wasn't born rich. When people hear the name Warren Buffett, they think of billions. He's one of the richest people on the planet. A legend in investing. The Oracle of Omaha. But what most people don't realize is, Warren Buffett didn't come from money. He built it one small step at a time. Warren was born in 1930, in Omaha, Nebraska. Middle of America. Middle of the Great Depression. His dad owned a small investment firm. They weren't poor, but they weren't rich either. It was a normal, modest household. But even as a kid, Warren was different. At 6 years old, while most kids were playing tag, Warren started a business. He bought packs of chewing gum and sold them door to door. Then he started selling Coca-Cola bottles, 5 cents each. He was always thinking, how can I make a little more money? By the time he was 11, he made his first stock market investment. He bought 3 shares of City Service at $38 per share. The stock dropped to $27. Warren panicked. But eventually, it rose to $40 and he sold. He made a small profit, but then watched the stock climb all the way to $200. That was his first big lesson. Be patient. Let great investments grow. Why does this matter? Because Warren didn't wait until he was older. He didn't need a degree. He didn't need a lot of money. He just started small. And started early. That's what changed his life. And guess what? You can do the same. It's not about making millions overnight. It's about building habits that compound over time. Warren's journey started with chewing gum and soda bottles. Yours can start today with the next decision you make. Obsessed with numbers. Warren wasn't like the other kids. He didn't care much about sports. He didn't spend hours watching TV. What he loved was numbers. While other 12-year-olds were playing baseball, Warren was reading stock tables in the newspaper. He memorized company names, prices, and how the market moved. He was fascinated by how businesses worked. He wanted to know, how does money grow? Why do some companies win and others lose? At 13, he filed his first tax return and deducted his bike as a business expense. Why? Because he was delivering newspapers on it. Then came the book that changed everything. One day, Warren picked up a book called 1,000 Ways to Make $1,000. It sounds old school now. But for Warren, it was life-changing. He realized something powerful. If I can make small amounts of money consistently and reinvest it, I'll never have to work for someone else. From that point on, he was hooked. Here's what Warren did as a teenager. Sold used golf balls. Ran pinball machines in barbershops. Bought farmland and rented it out. Bought a used Rolls-Royce and hired someone to drive it as a limo business. All before he turned 18. He wasn't a genius. He just loved to experiment with money. And more importantly, he loved to learn. What can you take from this? You don't need $1 million to start thinking like an investor. You just need to be curious. Warren's edge wasn't talent. It was obsession plus consistency. He spent his teenage years learning the language of money. And that language, numbers, value, logic, became his biggest advantage later in life. Today, most people scroll social media. Warren scrolled through stock charts and business reports. What are you spending your attention on? Because where your attention goes, your future grows. Early mistakes and big lessons. Warren Buffett didn't get everything right from the start. In fact, some of his earliest decisions were wrong. But that's exactly what made him great. Because Warren didn't just make mistakes. He studied them, learned from them, and never repeated them. Let's go back to his first stock purchase. City Service, 3 shares at $38. The price dropped to $27. He got scared. Then it bounced back to $40 and he sold. Great, right? No. Because a few months later, it climbed to $200. That one decision, to sell too early, stuck with him. He learned. You don't make real money by buying and selling quickly. You make money by buying great companies and letting them grow. Another early lesson: partnerships in people. In his early 20s, Warren started small investing partnerships with friends and family. One time, he trusted someone else's judgment on a stock he didn't fully understand. The result? He lost money and trust. He realized: never invest in a business you don't understand. Even today, that's one of Buffett's golden rules. He calls it staying within your circle of competence. The big idea here? Warren didn't try to be perfect. He just made each mistake only once. And with every misstep, he asked, what went wrong? What could I have done differently? What can I do better next time? His words: it's good to learn from your mistakes. It's better to learn from other people's mistakes. That mindset made him sharper year after year. What can you learn from this? Don't rush success. Be okay with being wrong, but always ask why. And remember, mistakes are tuition in the school of experience. Warren didn't fear failure. He feared repeating the same failure twice. That's how he became smarter and richer. Buffett plus Benjamin Graham. In the world of investing, there's one name that Warren Buffett speaks about with deep respect: Benjamin Graham. Ben Graham wasn't just a professor. He was the father of value investing and the man who wrote the book that changed Buffett's life. The Intelligent Investor. What's value investing? It's simple. Buy great companies for less than they're worth. Instead of chasing hype, you look for undervalued assets, strong businesses that are temporarily mispriced. To Graham, the stock market was like a mood swing full of emotion. He taught Buffett: don't follow the crowd. Don't trust headlines. Trust the numbers. Columbia University, a turning point. Warren wanted to study directly under Graham. So he applied to Columbia Business School just to learn from the master. He got in. Sat in Graham's class. Took notes on every word. Warren called it the best education I ever received. Graham became more than a teacher, he became a mentor. Buffett's early job at Graham Newman. After graduation, Buffett begged for a job at Graham's investment firm. At first, Graham said no. But Warren kept writing him letters. Kept showing up. And finally, he got hired. There, he learned to analyze companies deeply. Ignore the noise. Buy with a margin of safety, meaning never pay full price. It was tough, analytical work. But Warren loved it. One of the most powerful lessons. In the short run, the market is a voting machine. In the long run, it's a weighing machine. Benjamin Graham. Translation? People might hype or hate a stock today. But over time, the real value will show. This became Buffett's core belief. He didn't care about today's hype. He cared about long-term truth. What can you take from this? Find mentors even if it means chasing them. Learn timeless principles, not trendy tactics. And always ask, am I buying value or hype? Graham gave Buffett the foundation. Buffett built a fortune on it. How Buffett built his wealth. After working with Benjamin Graham, Warren had a decision to make. Do I stay in New York or build something on my own? He chose to go home to Omaha. Not Wall Street. Not Silicon Valley. Just a small town with big dreams. Buffett Partnership, Limited, the beginning. In 1956, at age 25, Warren started his own investment partnership. He didn't have much money. But he had trust. He convinced family and friends to invest with him a few $1,000s each. Warren put his own savings in too. And he made a simple promise. I won't take big risks. I'll only invest in businesses I understand. And I'll never put your money in something I wouldn't put mine in. That built confidence. And over time, it built wealth. Berkshire Hathaway, from mistake to masterpiece. In 1962, Warren started buying shares of a failing textile company, Berkshire Hathaway. At first, it was a classic Buffett move, buying cheap, struggling companies with hidden value. But he soon realized the business wasn't going anywhere. The industry was dying. It was a mistake. But Warren didn't panic. He thought, what if I use this company as a shell to buy other, better businesses? And that's exactly what he did. He transformed Berkshire Hathaway into an investing powerhouse, a holding company that would own stakes in Coca-Cola, American Express, Geico, Apple, Dairy Queen, and dozens more. The secret? Compound interest. Buffett didn't chase quick wins. He chased steady, compounding growth. Someone's sitting in the shade today because someone planted a tree a long time ago. Warren Buffett. What does compounding look like? Age 30, $1 million. Age 50, $300 million. Age 60, $3. 8 billion. Age 90 plus, over $100 billion. He made 99% of his wealth after age 50. Not because he made huge bets, but because he made smart ones consistently for decades. What can you learn from this? Start early, even with small amounts. Stay consistent. Be patient. And always reinvest your profits. You don't need to be rich to get rich. You just need to stick to the plan long enough. Buffett did it from Omaha. You can do it from anywhere. Buffett's rules for smart investing. Warren Buffett doesn't follow the crowd. He follows rules. And they're not complicated. In fact, they're surprisingly simple. But most people ignore them, and that's why most people lose money. Rule number 1, don't lose money. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Buffett is obsessed with avoiding losses. He doesn't gamble. He doesn't chase hype. He looks at every investment and asks, what's the downside? Because if you lose 50%, you need to gain 100% just to get back. Protecting your money is step 1 to growing it. Rule number 2, invest in what you understand. Buffett never invests in trendy things he doesn't get, like crypto or tech startups he can't analyze. He calls it staying within your circle of competence. If you don't understand how a business makes money, don't invest in it. Clarity beats complexity. Rule number 3, be fearful when others are greedy. Be greedy when others are fearful. And fearful when others are greedy. When the market crashes, Buffett buys. When everyone's celebrating, Buffett gets cautious. This rule made him billions, especially in crises like the 2008 financial crash, the COVID-19 stock dip. Rule number 4, think long term. Buffett once said, if you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes. He doesn't trade stocks. He owns businesses. And he holds onto great ones for decades. Rule number 5, read a lot. Warren reads 5 to 6 hours a day. Not gossip, but business reports, company filings, and books. Why? Because better decisions come from better information. He once said, read 500 pages like this every day. That's how knowledge works. It builds up, like compound interest. What can you do with these rules? Protect your money. Invest only in what makes sense. Stay calm when the market panics. Play the long game. And keep learning every single day. Buffett didn't get rich by being flashy. He got rich by being smart, steady, and simple. And you can too. What makes Buffett different? Warren Buffett isn't flashy. He doesn't drive a Lamborghini. He doesn't live in a giant mansion. In fact, he's lived in the same house in Omaha since 1958. He eats McDonald's for breakfast, drinks Coca-Cola every day, and still uses a flip phone. He's a billionaire, but he lives like a regular guy. Why? Because Warren Buffett doesn't care about appearances. He cares about value. Simplicity is his superpower. While most people chase more, Buffett focuses on what matters. He doesn't waste time on drama. He doesn't try to impress. He focuses on clear thinking, good habits, long-term growth. His daily routine? It's not complicated. He spends most of his day reading. He avoids meetings. He protects his time like a treasure. The difference between successful people and very successful people is that very successful people say no to almost everything. Warren Buffett. He chooses people carefully. Buffett doesn't work with people he doesn't trust. He once said, "You can't make a good deal with a bad person." He looks for 3 things in a partner: integrity, intelligence, energy. But, he adds, if they don't have integrity, the other 2 will kill you. His values go beyond money. He plans to give away 99% of his fortune to charity. He's a leader in the Giving Pledge, encouraging billionaires to give back. Why? Because for Buffett, the real measure of success is how many people love you. Not how much money you have. Not how famous you are. But how well you treat others. What makes Buffett different? He stays humble. He stays curious. He stays true to his principles. And that's a big reason why his wealth stayed. He didn't just get rich. He stayed rich with wisdom, patience, and purpose. How you can start investing smart today. You're not Warren Buffett. But that's okay. You don't need billions. You don't need a finance degree. You don't even need to be great at math. What you need is a long-term mindset, a plan, and the courage to start. Step 1: Start early. Buffett made his first investment at 11. You can start today even if you're 18, 28, or 48. Time is your biggest weapon. Because of compound interest. The earlier you start, the less you need to invest later. Step 2: Spend less, invest more. Don't spend everything you earn. Set aside a small piece every week, every month. Use simple tools. Index funds, ETFs, long-term retirement accounts like Roth IRA, 401k. Buffett recommends low-cost index funds for most people. Why? Because they beat most fancy hedge funds with lower fees. Step 3: Learn the basics. You don't need to become a stock expert. But you should understand how a business makes money. What makes a good company? Why long-term growth beats short-term hype. Start by reading The Intelligent Investor, Ben Graham. Common Stocks and Uncommon Profits, Philip Fisher. Warren Buffett's Annual Shareholder Letters. Step 4: Think like an owner. When you buy a stock, don't think like a trader. Think like you're buying the entire company. Would you want to own it for 10 years? Would you be proud to be a part of it? That's how Buffett invests. Step 5: Be patient. Most people want to get rich fast. Buffett got rich by getting rich slowly. He says, "It's not about timing the market. It's about time in the market. Let your money grow. Let your knowledge grow. Let your discipline grow." Final challenge. Before this day ends, do one of these. Open a savings or investment account. Read 5 pages of an investing book. Set a budget and commit to saving 10%. Watch one of Buffett's interviews and take notes. You don't have to be great today, but you do have to start. Final words. Warren Buffett wasn't born a genius. He became one through curiosity, action, and time. And so can you. The best investment you can make is in yourself. Warren Buffett. Start now. Start small. And never stop.